A contractor came to me with a full year's worth of bank and credit card and loan statements and one question. Am I actually making money with my business? 6 years in the business, a full schedule, good reputation in the area, clients who liked him, and he had no idea if his business was working. So we sat down, met in our Carlsbad office and went through 12 months of bank statements, went through every deposit, every charge, and every payment. I see these same five patterns in almost every contractor I work with. I'm David Nguyen, CPA and founder of Accounting Fresh. We're based in Carlsbad, California, and we work with contractors and trades business owners who want to actually understand their numbers. For this one specific business owner, revenue was strong, but cash wasn't. First thing we found on paper is this guy had a great year. Revenue looked solid, but his bank statements almost never reflected that. So here's why. He was finishing jobs in 1 month and invoicing in the next month, sometimes 2 months later. And once the invoice went out, there was no follow-up system and no reminders, no late fees. Invoices just sat there. Some went 60, 70, 90 days unpaid. Meanwhile, material costs don't wait. Payroll doesn't wait. Fuel doesn't wait. So the money he earned on a job in March didn't show up until June. But the cost for that job hit in March. That gap is what was killing his cash flow. So the fix, we set up a consistent invoicing schedule, added payment terms with a late fee policy, and built a simple AR aging report he reviews every single week. And within 90 days, his average collection time dropped significantly. Revenue on your income statement means nothing if the cash isn't in your account when you need it. The second finding was that he wasn't paying himself. He was paying himself last. This one I see every single time. Contractors tend to pay themselves whatever is left over at the end of the month, good check. Slow month, almost nothing. When we mapped out his actual monthly draws against the revenue he generated, the math did not work. He was paying himself less than he would have made working for somebody else after 6 years of building his own business. This is not sustainable, and deep down, he knew it. He just didn't have a number to point to. We introduced a simple owner pay structure, a percentage of gross revenue collected, not what's left over after every other expense clears. His pay became a line item, not an afterthought. That one change made the business feel completely different to him because for the first time, he was running a business that actually worked for him. The third finding was material costs were leaking. This one doesn't get talked about enough. He wasn't losing materials to theft. He wasn't being reckless. The problem was there was zero system for tracking where the materials went. Supply runs got paid with a personal card one day, the company card the next, sometimes cash. Materials bought for one job ended up on another job. There was no consistent way to connect the cost back to a specific project. And here's why that's a big deal. Without accurate job costing, you cannot know which type of jobs are actually profitable for you. I have worked with contractors who discovered that the job type they were doing most often was also the one they were losing money on every time. They were staying busy, doing the wrong work. So we set up a simple system in QuickBooks Online to tag materials by project. It doesn't need to be complicated. It just needs to exist. And once it does, you can finally see your actual margin on every single job. The fourth finding is subscriptions and recurring charges had multiplied. This one surprised him. Over 12 months, we found software subscriptions, equipment rental accounts, tool vendor charges, and a handful of other recurring charges that he either forgot about or assumed had been canceled. Several $100s a month just gone, not reviewed, not evaluated, just auto charging. This is extremely common when you are running jobs and managing people and dealing with everything that comes with owning a construction business. Reviewing your recurring charges is basically never a priority, but it adds up fast. So quarterly review, bank statements and credit cards, just 20 minutes is one of the most easiest things you can do to cut unnecessary overhead out of your business. And finding number 5, tax surprises were an annual event. He had been filing taxes with someone who did fine work during tax season, but outside of April, that person was essentially unavailable. Nobody was watching his income throughout the year. Nobody was flagging estimated tax payments. Nobody was telling him to set money aside when a big job came through. So 2 years in a row, he got hit with a significant tax bill that felt like it came out of nowhere, and it set him back both times. Here's what I tell every contractor. Tax season should not be a surprise. If you have a CPA who only exists in April, you don't really have a CPA. You just have a tax filer. Real CPA support means quarterly check-ins. It means estimating what you owe before you owe it. It means timing purchases strategically. It means never getting that call in March that makes your stomach drop. Once we had the full picture, we put 5 things in place. 1, weekly cash flow tracking tied to his project schedule. Number 2, job costing in QuickBooks so he could see true profit by project type. Number 3, a consistent invoicing and follow-up process with clear payment terms. And number 4, quarterly tax planning check-ins so nothing sneaks up on him. And number five, a monthly financial review that takes him less than 30 minutes. 6 months later, he told me it was the first time in years he felt in control of his business. He didn't change the type of work he was doing. He didn't land bigger clients. He just finally had clarity on his numbers.